My name is Chris DeLuca. I'm the founder of Ultralight Startups here in Boston. Here my co-host is Graham Lawler, the founder of Ultralight Startups based in New York. We're here doing events in Boston for about 3 years, and Graham has been started this about 5 years ago in New York City. We have two real programs that we produce. We have a high-tech internet, mobile, social software startup track where companies are presenting very similar to tonight, but it's all focused on internet startups. And then we have a energy track, obviously sponsored by Shell, and that's called Future Energy. So that's why what you're here to see, and that's what we're going to show you. This is sponsored by Shell's Game Changer Group. I'm just going to walk you through the agenda for this evening. So we have introductions. Obviously, we'll introduce to the panel in just a moment. We have 8 startup pitches pitching to you for 3 minutes. Then there'll be an audience voting competition. So towards the end of the night, right around 8:30, 8:45, you'll receive an email. If you registered through Eventbrite and you got a ticket that way, you'll receive an email. We'll also publish a URL where you'll be able to visit from your smartphone or smart device or computer, and you'll be able to vote on your favorite companies as well as your favorite panelists. So I'll tell you about that in a minute. And okay, Graham, would you like to say how these companies were selected?
Sure. Thanks, Chris. So we had 103 energy and clean tech startups apply to present at this event. We are interested mainly in early stage companies. So anybody that has already raised a Series A round of venture capital was filtered out. In addition, we ran a crowd voting contest online, so the applicants could create a profile online and get their friends and supporters to vote for them. And the 2 companies that got the most votes in the crowd voting contest got automatic spots to present here. I believe they're number 1 and 2 on the list tonight, Spilvenger and Senergy. And then the remaining 6 presenters tonight were picked by our selection committee, and that's on the basis of a cross-section of different technologies. We wanted to have a little something for everyone, and early stage and sort of radical energy technologies. So all 8 of the companies that are presenting today did receive coaching and went through a number of revisions of their slides that you'll see tonight. So that's how we got to these companies today. And so now we'll just introduce the investor panel. We will start alphabetically with Eric Bielke of Siemens Venture Capital. And just tell us a little bit about Siemens Venture Capital and maybe the most recent investment that you made.
Sure. So Siemens is a group of about 12 investment professionals. We've got a relatively large technical team behind us, around about 350,000 engineers, I think at last count, around the world. Our team invests across a number of spaces. So we're in energy, for sure. We're also in infrastructure, industrial drives, and warehousing equipment, and then medical tech. Actually, most of our investment, I'd say about a third of our investments are in diagnostics and healthcare. I personally focus primarily on power generation, on water, and on energy storage, and some digital and software tech. Our latest investment was actually a company in Sunnyvale, California, founded in 2003. It is a company that you would not expect a group like Siemens to invest in because it's designed around making software developers more efficient. The company is called Electric Cloud, and they're in what you would say is the DevOps space. They work with embedded software teams within large organizations to help their software teams run faster by developing software that actually facilitates the speedy development and testing of software. And I'm happy to go into detail on that with any of you who are firmly in the kind of Microsoft community here and want to talk to Electric Cloud. But we're investors typically in late-stage companies. Our typical deal size is 2 to 10 million. We prefer companies in their B, C, D round. We tend not to take a lot of early-stage risk, but we do like to help companies scale. In fact, one of the key value propositions working with a group like Siemens is that we are global, and so our sales channels are as well. And for an organization that's looking to take their product from post-pilot to really commercialized at scale, we're a group that can help you do that.
Fantastic. Thank you, Eric. So next up, we have Rob Day from Black Coral Capital. Tell us a little bit about Black Coral and maybe your most recent investment.
Sure. And thanks, everybody, for being here. What a great turnout, huh? Black Coral Capital, we are a single-family office focused entirely on clean tech private equity. We will invest in everything from early-stage venture capital on through to project finance. We've actually also acted as limited partners in other funds as well, so that gets us further exposure to early-stage clean tech venture capital. And we're really focused on business model innovations. We're really focused on trying to figure out how to get clean technologies adopted in the marketplace by changing how people buy and sell and use them. That means sometimes we'll be investing in technology-based companies that have a new approach to how they're systematizing that technology so that it's more readily adoptable in the marketplace. Or sometimes we'll back just a pure business model innovator like a service company or a web-based company. So I guess that's what and we're based here in Boston. I guess that's what I would point to is my most recent investment, not my firm's most recent investment, but the most recent one I led is a company called Noesis Energy. They're based down in Austin, Texas. They are a web-based platform for enabling more commercial and industrial energy efficiency. They will provide the data, the information, the analysis, the validation, the energy efficiency financing, pretty much everything that a large building owner needs in order to be able to feel comfortable and to actually push the button on executing on an energy efficiency project. Because we look at the world of things like energy efficiency and we say, man, there's a lot of stuff that absolutely should get done that isn't getting done. And we view that as being because of economic and non-economic barriers beyond just the pure unit economics and paybacks of the technology itself. We think that's a really cool challenge to take on, and we love entrepreneurs who do that kind of thing.
Fantastic. Thank you, Rob. So next up, Henrik Holland from Shell Venture Capital, Shell Technology Ventures.
Hi, everybody. Thank you for having me tonight. It's really great to be here. I work for Shell's corporate venturing group, Shell Technology Ventures, out of Cambridge here. Moved here in April from the Netherlands. So as a company, this is kind of our first introduction to this ecosystem. It's been really exciting over the past few months to get to know many of you already. We invest in relatively early stage, in our terms, technology with the intent to accelerate innovation in our core business. So we look at oil and gas related enabling technologies, could be gas to chemicals, could be sensor technologies. We also look at IT related things like prescriptive analytics, kind of anything under the header of big data. We also have a theme around future energy technologies. We have a group specifically looking at new business models in future energy, and I work closely with them to identify specific areas of investment. And there we look at things like energy storage, and again, anything that has to do with natural gas as a destination fuel. We also have a group called Game Changer that does very early stage projects, so let's say more seed type things. And there's a colleague of mine here called Willem Rensink. And where's Willem? Can you stick up your hand? That's right. So
we'll hear a little bit more from Willem just before the break about what Game Changer is.
Very good, very good. So Willem's group is sponsoring this particular event. So the venturing group does anything from Series A to later stage. We love to work with companies where we think we can really add value to that company by providing expertise or field trials or being a launching customer. And we invest in syndicates. We'll take a board seat if we think that that's the appropriate thing to do, and we can lead investment rounds and follow.
Fantastic. Thank you, Henrik. So last up, we have Matt Nordan of Venrock. Tell us a little bit about Venrock.
So in a transparent attempt to influence the voting for best judge, let me open by professing my love for the quaint German town of Fribourg.
When was the last time you were there?
So very glad to be here. I'm Matthew Nordan with Venrock. Venrock is a weird animal among venture capital. It's arguably the oldest venture capital firm, formed in the 1930s as the venture arm of the Rockefeller family. Our alumni companies include Apple, Intel, and DoubleClick. We manage about $2.5 billion, and we invest all over the place. Our thesis is a little bit different from some of those you've heard. We don't care a lot about sector or domain. We're really looking for extraordinary entrepreneurs that have true breakthrough technologies, things that are not incremental and can support building a large independent company. And we're willing to back extraordinary entrepreneurs without extensive track records, that are young, first time in their careers, if we really truly believe that they have what it takes to build a large independent business. And many of our biggest successes for the firm over time have come from those kinds of entrepreneurs. I focus on energy and environment. Our check sizes are all over the place. The smallest check size I've seen our firm write is $30,000. The largest is a little north of 20 million. In energy, we focus on a little of everything. We are in a nuclear-related company, in a algae-based biocrude-related company, which will not influence my assessment of tonight's algae biocrude-related company, and a bunch of other stuff. The most recent investment that I drew is a firm called Nest, which makes a smart thermostat. It's a team out of Apple, founded by a guy named Tony Fadell, who was one of 8 SVPs reporting into Steve Jobs, the father of the iPhone and the iTunes ecosystem. He managed to bring 79 of his colleagues from Apple to build a new business focused on taking all of the gray and white unloved boxes in your home and turning them into things that have an extraordinary level of functionality and design. And so far, they're doing pretty well. So I'm really looking forward to hearing all these pitches. And the biggest thing to express is enthusiasm for folks who are taking part of their life, are embracing risk, embracing doing something with the opportunity cost of their time. You folks are the people who make the world go round, and thank you for being here.
Fantastic. Thank you so much, Matt. Okay, so we have, this is the pitch format. Each company is going to have exactly 3 minutes to go through their business and their technology. They'll have 2 slides that we have developed with our template. After those 3 minutes, there'll be 3 minutes of Q&A. So each of the panelists will have an opportunity to ask clarifying questions about the technology or the business. And then we go into advice from the panel. So the panel is then on the spot to come up with advice for the startup presenter. You answer that in the form of, what would I do if I were you? Here's the first thing I would do tomorrow morning if I were you. And that is the advice that you're all going to be rating these guys on. So how insightful and how helpful is that advice? So that's the format of the pitch. And audience voting. So we will email you a survey at about 8 p.m. tonight. You'll get an email from me that invites you to vote for your top 3 favorite startups and your top 2 favorite panelists. And those will win some prizes. So the prizes include quite a few things. Consulting session with Fraunhofer Tech Bridge, automatic application to Cleantech Open, $1,000 in credit at Mintz Levin, a law firm, Amazon Web Services credit, an interview with Surge Accelerator based in Houston, Action Network Pass, video feature from the Energy Collective, an interview at Agrion, and 1-month pass at Greentown Labs. So every single Future Energy event, it feels like we're adding more and more to the prizes, to the list of prizes. But the big prize, of course, is what does the panelists win for winning the Audience Choice Award for the best panelist here, and that is our eternal gratitude, is what they win. Which is a big deal. A lot of gratitude in here, you can see. You want to thank our friends, Chris?
Yeah, sure. So thanks, Graham. So obviously, we depend heavily on our partners, community friends, and we really want to just say thanks. Honored to have so many more than we can potentially mention, but I'll just call out a few people that have been instrumental in kind of getting the word out and really, letting the entrepreneurial community know that this event is happening, to give the opportunity to submit applications and really turn out such a great crowd. So special thanks, obviously, to Willem Rensink and the Shell Game Changer program for sponsoring the event. Of course, Mintz Levin, I believe Chris Lullier and Sadir Surmeli from Mintz Levin for sponsoring. Work Bar, a co-working space. You'll hear more about Work Bar later, but thank you to Work Bar. And obviously Microsoft Nerd for hosting us in this beautiful venue. Just kind of running off down the list of some key partners and friends. Thanks to Cleantech Open, New England Clean Energy Council, Greentown Labs, the Action Network, obviously welcome from Freiburg, ePowerhouse, Boston Tweet Up, Eventbrite Boston, Bostinno, Mass Challenge, Fraunhofer Tech Bridge, Mass Innovation Nights, Massachusetts Tech Transfer Office, MITx, North Shore InnoVentures, Boston.com, and Scott Kirstner from the Innovation Economy, MIT Enterprise Forum, all the university energy clubs, MIT, Northeastern, BU, Harvard, and Babson. Also special thanks to Mac Lipscomb, who was our pitch coach, who got the 8 presenters ready for tonight's pitch. So all of the startups were pitched and polished for our 3-minute presentation. And obviously, thanks to all the presenters that are here tonight. So just a big round of applause to all the different community partners and friends that made this possible. Thank you. Okay, and so we won't steal any more of your time with intros and housekeeping. We're going to jump right into the pitches. So now we have the first pitch of the night. It's Shu from Spilvenger.
Good evening, honorable guests, ladies and gentlemen. It is my distinguished privilege to introduce you guys to our product Spilvenger, whose name is a combination of oil spill and scavenger. It is an automated, highly efficient, sustainable feedback system that is designed primarily to collect oil spilled over the sea and to recover the oil. So basically, it sucks the oil into its body. It filters out the water from the oil to a concentration lower than 5 ppm, and then it desulfurizes the oil to a concentration, sulfur concentration of lower than 0.2 ppm. And after that is done, these 2 criteria are critical for the oils further being utilized by the low temperature solid oxide fuel cell, which is basically the engine of this robot. And this bowl-shaped robot has an oil container where the oil that is not consumed by its motion is contained in the oil container. And all the Spilvengers are coordinated by the signal tower to dump the oil into a larger oil container. So the 3 technological differentiators are, the first, there is no combustion of the oil over the sea, so there is no hazardous gas like nitrous oxide or carbon monoxide released into the atmosphere. And secondly, there's no dispersion just to dilute the oil, so 80% of the oil is recovered. And lastly, it is 60% reduced in terms of the cost compared to the prevailing skimming method. Next page, please. And our customers are mainly big oil producers such as Chevron and BP. And we promise 14 days of BP scale oil spill cleanup, and also we promise to create a greener image for our clients, for their clients. And there's a decrease of oil spill cleanup energy expenses by 40 to 60%. Our revenue stream is created through product sale or commission, and our sales team mainly focus on product promotion among the oil producers. There's no existing direct competitors in the market yet, and our method has a proven better efficiency than any other cleanup method. And lastly, we hope to establish a friendly relationship with the government to gain regulation and policy support. Here's a relatively conservative revenue stream prediction, and in 5 years, we should be able to break even. And for the ecosystem and our Mother Earth, I would like to ask you to support our product. Many thanks. I rest my case.
Okay. Nice job, Shu. So why don't we move right into the panel? This is a chance for Eric. Would you like to ask a question, clarify the pitch, and dig into any details that we have?
The first...
Yes.
Everyone can hear me? First question, I think, is where are you at to date? So we've heard a great idea and a definite demand out there, but how far is the product?
Okay, so there are 4 critical steps of the product. The first is there should be a coordination system, self-feedback system. The second is filtration, the water deconcentration. And the third is desulfurization, and last is low temperature solid oxide fuel cell. We have in lab being able to reduce achieve the filtration and desulfurization purpose. And we have also a very intelligent computer scientist who is able to have the signal tower controlling the boats, and the Z-cell feedback system works. And lastly, the low temperature solid oxide fuel cell is in the market right now. So we have all the critical R&D components. The next step we want to move into is to have to integrate these ideas together to make a coherent prototype.
Next question, Rob.
Just questions or questions and comments?
Just questions.
All right, well, I guess more in the realm of comments. First of all, slick presentation. Well done.
Thanks.
I knew Matthew at least would enjoy that. And by the way, you know, for any of you sitting in the first couple of rows, I apologize for what Matthew has been whispering about you, you know, up here to the rest of the panelists. No matter what he says, I think you're all great.
Going for votes.
Look, I mean, one of the challenges with selling into this industry that you're looking to sell into is that it's very much a prove-it industry. There are very few instances of the major players in this industry putting money into something until they've seen it work several times. Mm-hmm. So that's the single most important thing you have to do. You have to get a demonstration out there. The fortunate thing is that for what you're going after, there are a number of photogenic opportunities for being able to fund those kind of demonstration projects. So one of the first things I would do if I were you is I'd actually, and I don't, this is advice I would almost never give to an entrepreneur at your stage, but at this point I actually would go try to track down some of the government stakeholders in the Gulf Coast region, tell them about your idea, and tell them that you're looking for just some money to help get a demonstration up and running.
I see.
And then use them as leverage to open up doors with conversations.
Yeah.
Perhaps with the gentleman to my left, but more importantly with the actual service providers, the Schlumbergers of the world, the folks who are actually going to be dealing with these types of situations as the contractor.
Thank you for your advice.
Okay, folks, so let's stay on point with the questions. So that we'll have a whole other round of feedback session as well. So Henrik, question, go for it.
Very well. I won't ask the question why you didn't mention Shell when you talked about the major oil producers. Maybe it's because we now produce more natural gas than oil. So thank you for pointing that out to the rest of the group here. So thank you.
I don't want to damage your...
Yeah, kind of, I guess, related to Rob's question is how big do you actually really think that your market is?
Oh, okay. Yeah, I actually have done a market analysis. So in terms of the oil, like there is two major. The first is big spills, and the second is offshore drilling spills, and that occupies the entire oil market with a market share of 7.37%. And if you convert that into monetary terms using the current methodologies of oil cleanup, that will be equivalent to a $4.26 billion market annually. And we predict that this market is going to expand at a rate of at least 2% for the next 5 years because people are using super tanks and they are doing more offshore drilling nowadays. So we think it's a really large market. If we can just capture a small percentage, like maybe just 10% or 5% of that market, we will be able to create a very significant profit.
Next question, Matt.
What is the sequence of events you envision to get from showing the components of this in the lab to putting a first unit out in the field? What happens in what order?
Okay, so I think since we have already succeeded in filtration desulfurization and as we have solid oxide fuel cell now, so now it's the electrical and mechanical engineer's job to assemble all the components together into a prototype. And we want to test it maybe in a small swimming pool with oil spilled into it and see if it works in a small area. And then after the prototype works, we want to establish, maybe do some lobbying for the government, and as the gentleman just suggested, and maybe after that, maybe we can, if we get more venture capital funds, we can manufacture more boats and construct signal towers after. But it's probably gonna take at least 3 or 4 years to get there.
Okay, so now this is the feedback session. This is the opportunity for the panel to give advice. So Eric, why don't we start back with you? You know, what kind of takeaway advice, what would you like to send Chu off with? What kind of message would you recommend for him?
So 3 to 4 years is a long time. I think the first thing to do is grab a Red Bull and get ready for a long fight. You've got a lot cut out for you. I think tomorrow morning, if I were in your shoes, the first thing I'd think about is how much money do I have in the bank and how much more do I need to get to first prototype. And if you have enough, just get in the lab and spend most of your time just building products so you've got something to show at the next stage of fundraising. If you need more money, I would follow Rob's advice now and go find some people who can give it to you who don't take equity.
Thanks.
I guess I already provided feedback, but one thing that I think a lot of entrepreneurs who come up with a very interesting new system in this field in particular often neglect is who's actually going to sell it for them. You can sell it for yourself, but not very many. So already be thinking, even in the early days, about how you reach out to who will eventually be your channel partners, because you need to learn not just what their customers need, not just how this will work in the real world, but also what the channel partners will need for them to be able to sell it effectively and be incentivized to sell it effectively.
Thanks.
Feedback, Henrik?
Yeah, so in short tomorrow morning, I guess I would just give myself a call, because I think it is really important to understand, because this is such a kind of regulated, multi-stakeholder type environment. I think it's really important to understand what the value drivers are for the gas and oil companies to purchase these types of services, how that whole value chain works, and who the service companies are, and what their value drivers are in selecting technology. So, yeah, I would really work on building a very good understanding of how that whole value chain and ecosystem works.
Okay.
I will. Thanks.
Takeaway feedback, Matt. Go for it.
So I become genuinely happy when I hear your presentation, because this is a huge idea and a hard problem. I think the challenge is it's actually 4 hard problems. And any one of these things that you bite off, if it's going to be decentralized routing in an extreme environment of autonomous craft, or the 2 separate, a water filtration and a desulfurization part of the process, or getting an SOFC, right, which does not exactly have decades of, performance data.
That's right.
To work in a marine environment, all of those seem like individually giant challenges. And the sense that I get is that as an entrepreneurial team, and what sounds like a first-time entrepreneurial team, the probability that you're going to solve 4 of them concatenated asymptotically approaches 0. The good thing is, I think that any one of those 4 could itself be an important and freestanding business. I would look at, what the key problems are that don't have as other well-developed solutions, where you end up adding the most value and you can be an important component to someone else's system that can get you going at scale. And I would be thinking about how to narrow the funnel of what you're trying to accomplish rather than broaden it. As a corollary to that, the financial projections that you have shown, I think, are bananas. And I mean that in a good way. Like, it's great to be, optimistic and to dream with your feet on the ground. Hardware businesses, certainly of this type, that require building something big and heavy and expensive, typically are $50 to $100 million projects. They can be way more than that. Tesla took $350 million of equity capital. I would sharpen your pencil and think hard about how much money this will actually take. I think presenting numbers that are more realistic will enhance your credibility.
Thanks.
Great feedback. Round of applause for Shu. Well done.
Okay. Next up, we have Bobby Lambert of Senergy.
Good evening, everyone. My name is Bob. My company is Senergy, and we plan on revolutionizing the energy market in the Northeast. Senergy specializes in providing 20% below market rate electricity to municipalities and 501c3s. We're able to accomplish this using 4 simple steps. The first step is to raise money via our crowdfund system online and use it to leverage even more capital. The second step is to use these funds to build solar arrays. The third step is to monitor and distribute the data generation for these systems to all stakeholders involved. And the fourth component is to manage the power purchase agreement between the crowd investors and the municipalities. So why do I believe that something so simple marks such a monumental shift in the energy market today? That's because it is a link between distributed investment and distributed generation in real time. This link means that each system to be crowdfunded on our site represents the lowest price to invest in solar infrastructure in the Northeast on that given day. The link also means for each system that's been constructed, Senergy works as a solar stock ticker, showing investors their investments in real time and showing consumers their savings in the moment. Senergy is a new market for investors and consumers to be linked to benefit both. You give investors the power to choose who their money benefits, which in turn gives consumers the power to choose their own utility. So about now, you might be wondering what sort of numbers come out of this endeavor. Well, here they are. Next slide. For each system, the crowd is required to raise $30,000 in debt. Each investor will receive 8% interest annually on every dollar that they invest towards creating the system. The systems will be 65 kilowatt systems, and they will be able to provide returns to the investors and savings to the consumers on their own, essentially becoming sustainable, renewable micro-utilities. We hope to build 45 systems in 3 years. That means by the end of year 3, over $300,000 in interest payments will flow back to the crowd, and over 3 million kilowatts of clean electricity will go to towns and municipalities across the Northeast, with 56 million more to come.
10 seconds.
We realize revenue through 1% annual management fee of the PPA through years 1 through 10, and 100% thereafter. That means $7.5 million in value by year 3. Thank you.
Okay, so we're going to hold the applause. Let's move right into the feedback. I'm sorry, questions. So go ahead, Eric. What would you like to ask for questions?
Sure. So first question is, have you thought about how much it's going to cost to maintain a large investor base, crowdfunded, and provide them interest on an annual or quarterly basis over time? Do you have a sort of a dollar per investor?
I think we would be leveraging the financial networks of the bank that we would be partnering with to monetize the tax credit to make it work. But the calculator that we've developed essentially provides the returns based on the generation of each system every time a system is going to be funded. So they stand alone in the investments that are being returned to the customers.
Next question, Rob.
Who owns the RECs?
I'm sorry, what?
Who owns the RECs? Who helps this qualify under, the various, renewable energy portfolio standards and the likes?
We
like
would be,
SRECs here in Massachusetts.
Right. We would be responsible for setting up all aspects of the system, including the debt services.
Right, so who owns the RECs?
I'm sorry. The renewable energy credits would actually be put into forward contracts with utilities so that we would have that money up front to make the PPA rate as low as possible.
How are you going to manage the acquisition of your customers?
The acquisition would have to be internet-based, although the Jobs Act allows for general solicitation through crowdfunding today. So we would have to be approaching investment networks of angels, or through, once again, the financial institution that already has bank accounts with clients.
So what are the investors buying? Are they buying equity interest in an LLC or something else? I'm trying to figure out if they have to be accredited.
Sure. Under the Jobs Act, we can have an unlimited number of accredited investors for each system, but only 35 unaccredited investors. They would actually just be providing debt instruments. So they wouldn't actually own equity in the system, but they would be lending money to build the system in the first place.
Okay, so let's move into feedback. So really, in any order, Eric, you could go first, or if anyone wants to jump in, what takeaway advice would you like to give?
So I think one of the first things I learned when I also tried to build a solar company is you have to build the system before you can do the fancy financing. So I think the first thing on your plate is go out and build a solar system. And maybe that's in your background. We didn't have the time to get to that. If that is great, you're already there. But if you haven't got an operating system that is generating cash flows, that's step one.
First thing you need to do is hire a really good lawyer and have several $100,000 to throw at figuring this out contractually, because I've actually seen this. I've seen this in crowdsourcing for solar. And absolutely, you're right. I mean, this is an exciting opportunity space. But as you can tell from the question I was asking about the renewable energy credits, and then when you get into, who's going to get the pass-through, who's going to get to hold the investment tax credits and things like that, I've seen that exercise take 9 months, and like I said, tens if not hundreds of thousands of dollars of legal fees. So my friend Sa right there, I'm sure would be very happy to speak with you after this.
Yes, please. Feedback, Henrik, and speak right into the mic, guys.
Yeah, well, thank you very much for the presentation. My feedback is very much along the lines of what's been said. I would look at what has failed in this space before and why that has actually happened in some great detail. There seems to be a lot of legal aspects to this. And you have listed there that there's a first mover mosaic, so check exactly what they did right and maybe how you can improve on that.
Feedback, Matt.
So this is going to happen, right?
Yes.
It's unstoppable force meets a movable object. This is a type of system that just completely works for getting money from people in their communities to in some way improve their communities. So the great thing is that I think your macro is great macro. I think we're all going to end up echoing Rob's point that the monies made by lawyers to do this are very great. And Mosaic, which is the first mover and which, isn't standing still and is moving pretty quickly to be national, I think will raise a question for you, which is what can you guys not just do well but great at? I mean, what can you be fantastic at? And I would take some lessons from the broader, residential solar field. There's room in the market for a certain number of Solar City, Sungevity, et cetera types that are going to have an extraordinary back office and the lowest cost of being able to acquire and service customers. You may be able to do that, but you're pushing a rock up a hill a little bit because there's somebody there, ahead of you, and then other, initiatives that are a little further along than this one. What you might be able to do, and it depends on your geography, is to be an aggregator that then feeds projects into those engines. Maybe you don't have to build the whole thing. Maybe you don't have to have this giant back office. I'd think about that.
Thank you. Well done. Round of applause for Bobby.
So much, Bobby. So next up, we have Thomas Olsen of Zephyr Energy, and on deck, Evan Kantor of Raja Systems. So Evan, if you can kind of make your way over there. So 3 minutes. Thomas, go ahead.
Hi, everyone. I'm Tom Olsen, president and founder of Zephyr Energy Corporation. Our company is developing a micro-scale oscillating wind generator that can provide power for wireless sensor devices. Unlike traditional wind turbines, our system harnesses the oscillating motion of a suspended beam to produce power. The problem with wind turbines is that as they scale down, they become increasingly inefficient due to reduced blade size and mechanical friction in their bearings. The advantage of our system is there are no bearings. There are no gearboxes, brakes, or other complex subcomponents. Our design is low cost and straightforward. And as you can see, there's only a few components. There's a plastic hollow beam, magnets, coils of wire, springs, and an outer frame. I co-invented this technology as an undergraduate student at Northeastern University. The idea of an oscillating generator was derived from a 2011 Department of Defense RFP where they were seeking a large-scale alternative to wind turbines. However, along the way, we realized that our technology was better suited to meet the low power needs of wireless sensor devices. These wireless sensor nodes are used to capture and transmit data on environmental conditions, like air quality control, the structural integrity of bridges, and early forest fire detection. The issue with these devices is the cost and labor involved with replacing their onboard batteries. For this reason, energy harvesting devices like solar panels are currently being implemented as a primary or supplemental power source. But the problem with solar is that they only operate up to 12 hours a day and are unsuitable for locations with limited light exposure, like in a dense forest or a city like Seattle. By comparison, our system can operate day and night and can begin producing power in wind speeds as low as 4 miles per hour. And keep in mind, the average wind speed across the United States is 9.1 miles per hour. So Zephyr has filed 4 patents related to our technology, and we've received an exclusive commercialization license from Northeastern University. We've invested $100,000 in the development of our alpha prototype and are currently seeking funding for the optimization of our beta prototype, which is our smaller scale system. We'll then use We'll then do pilot tests over the next 8 to 12 months, followed with commercialization. And that's it. Thanks.
Okay, so let's start with Matt. Matt, let's move into the questions. So what would you like to clarify and dig into?
How much does it cost?
So our beta prototype is, the cost estimates based on quotes from overseas vendors and production quantity is $20 to $25
$20 to $25 per what?
per device, per microscale
What's
generator.
power output?
So we've gone from a larger scale device, which was our alpha prototype you saw on the first slide, which could produce power in the single-digit watt range. And now we're scaling down to meet the milliwatt power requirements of these sensor devices. So we're talking tens of milliwatts.
So this is going to be very expensive compared with solar or something like that, but the power requirements are so low that you may be fine.
Actually, I requested a quote from a leading solar vendor for a system that could power one of these wireless devices, and the quote that I received was $969 because these devices have to be oversized to be able to contend with multiple days without sunlight, where our system has a lot higher uptime because 4-mile-per-hour winds are much easier to achieve.
Next question, Henrik.
So do you really see this as a growing market, or are you more looking at replacing what's already kind of out there?
Yep. So the wireless, are you talking about the wireless sensor market or the energy harvesting?
Yeah, I guess, do you think that the wireless sensor market is going to be so large that this is going to be an interesting opportunity? And are you, and is that a growing market for you?
So the wireless sensor market doubled from 2010 to 2012 and is expected to grow 553% to 2017. And by 2021, it's expected that 250 million wireless sensor devices will be powered by energy harvesting devices. And this will represent a $4.4 billion market.
Question, Rob.
I've actually invested in and lost money on a linear motion-based generator in the past. So,
sorry to hear that.
Yeah, so tell me something that gives me comfort in the durability of the spring, particularly at high wind conditions.
Well, we've had pretty good success with the springs to date, and the springs are the only component that are really experiencing extensive wear. So with that in mind, as well as the big price difference between a $25 unit and a $900 solar panel, I think we'll be able to find a spring solution that will give us the long-term reliability we're looking for.
Planning on doing a lot of replacements of the springs as well?
No, we're looking for a spring solution that will have many years of continuous operation without maintenance.
Question, Eric.
My question actually dovetails nicely with the maintenance question. So one of the things from the perspective of an operator or a participant in a company that makes a lot of wind turbines is if you can take out some of this maintenance cost because there's fewer moving parts, you're in great shape. So awesome idea. The question, though, is how do you calculate the maintenance savings over time? Well, I guess that first depends on how long our device will last for. The springs themselves are only 1 to 2 cents each. So, with that in mind, the labor involved with replacing them is the real cost. But I think as we go forward in the coming months with our R&D, and we will work to find a spring solution that will last tens of years, not just a few.
Okay, so let's move right back down to Matt. Matt, takeaway advice. What would you like to tell Tom?
So this is not a complicated design, and it leads you to ask the question, why has nobody gone at it hard before? There are two things that I suspect may be the answer that I would dig into immediately tomorrow morning. One of them is, what would accelerated wear testing, halt-HOS testing tell you about the mean time before failure of these devices, and therefore what the actual cost of ownership will be for the client versus the first cost. The second thing that I would be thinking about is, does this really meet a customer need? And who is the customer for which there's no other option? Nobody's getting fired at this point if I drive down the highway and look at the panels attached to batteries for buying solar today. So this can't be cost competitive. It can't be 5 times better. It's got to be lots of times better. And probably the initial customer is somebody who has no other alternative.
Feedback, Henrik.
I think we should have him at the end every time. So on the technical risk side, I would find out how you can proactively address, people like Rob's concerns on the, with the durability and the maintenance of this kind of thing, because that's really important to this. On the commercial side, yeah, I haven't seen enough here to really understand the market and how you're really going to make money there, and who the people are that are willing to really buy this very particular solution. So, yeah, some more context to that would be fantastic. Thank you.
Thank you. Advice, Rob?
You know, I actually really like how you're going after a usage case that seems pretty uniquely tailored to the attributes of this technology and what it brings to the table. I guess I would ask you to view your initial market entry through another lens, though, and it sort of dovetails what these guys have said. There are a number of different places where you can take this technology, a lot of other technologies that people are developing, right? A lot of times we're developing things that are pretty, fundamental, and therefore can be broadly applicable. But you have to start with customers that actually adopt. And the way I would view it is, where can you sell into a marketplace where there isn't a change-averse channel player who dominates in between you and there? If you're talking about selling to governments, you're going through a contractor, right? If you're talking about selling train companies or whoever manages the tracks, you're talking about going through contractors. I guess my advice would be to think about where you can go, even if it's a small niche market that'll never make you be a big company by itself, but what'll be your bridgehead into the marketplace by finding some kind of opportunity that, like Matt says, there's no alternative, but additionally, there's nobody who's a channel partner who already has a chokehold on controlling how customers and why customers buy things.
Feedback, Eric.
So I think your morning homework, rather, is to build out that cost model that actually has been part of the comments and questions so far. You have to be able to beat conventional wind. Low cut-in speed has been done before. It's not brand new. It's going to be you're beating the conventional wind on an operating cost basis, and then go build it, put it in the field, prove it.
All right. Thank you very much.
Thank you. Thank you, Eric, and thank you, Tom. Okay, then the next presenter and the last one before a break is Evan Kantor of WattJoule Systems. So, Evan, you have 3 minutes.
This is the setup of a common off-grid power system: solar PV, a battery, and a diesel generator. The way this runs right now is pretty straightforward. When the battery state of charge drops below its minimum level, turn on the generator and leave it on until the battery is fully charged. But what if it's sunny out? Or what if the system could tell it would be sunny out in a couple of hours? Would you still leave the generator on for the same amount of time? Of course not. Once you've invested all that money in your hybrid power system, it makes sense to use every drop of sunshine you can to reduce the amount of diesel the system needs. Our software can reduce the billions of gallons of diesel that off-grid telecom tower sites and other commercial renewable energy projects use each year. We do this by first reading energy data from a site's operations center. We run it through our patent-pending hybrid power system optimization algorithms that make use of global weather forecast models, and finally control the set points of the generator. The result is a 50% drop in diesel costs. This leads project developers to the next question. What if I can design systems knowing that they'll be operated using forecasting and optimization? I can reduce the size of expensive PV and storage by 10%. That means I can reduce the amount of financing I need for projects, and that means I can do more projects. Next slide, please. Let's take the case of telco towers. For a 2 kilowatt average load site, we can save $1,200 a year in diesel costs. We charge $2,500 up front and $250 a year, giving them a payback of about 2.5 years. In the next 7 years, there'll be about 400,000 towers with solar, battery, diesel systems, giving us a market opportunity of $210 million a year. Our differentiation and advantage in the market: there are many telecom service companies that are focused on monitoring and maintenance, but we're the only ones using forecasting to lower energy costs regardless of what other service providers they're working with. We're a team of recent graduates from MIT, and while we don't yet have a commercial pilot, we have over 20 interested customers that would love to see our software at a commercial level. These include Cambridge Energy Resources, American Tower, GE, and the World Bank. Lastly, It's a good exercise to ask ourselves, will smart control of hybrid power systems be the standard years from now? Of course it will. Now let's make it happen. I'm Evan, CEO of Raha Systems. Thanks for your time, and I'm now happy to take questions.
Okay, moving into questions. So go ahead, Eric. We'll start with you per Henrik's request to finish with Matt.
So my first question would just be, do you have any deployments?
Pardon me?
Do you have some deployments? Do you have systems out in the field?
We don't have any commercial projects yet. Our CTO worked to develop a microgrid in Chile for a rural community there of about 100 people, and that's been operational for 3 years. So we have some experience on the team, but in terms of a commercial pilot, we don't have any yet.
I just want to make sure I understand it correctly. So essentially, though, at the end of the day, you're selling software seats, right? Now, you're selling a software seat for a microgrid, not for somebody at a desk, but that's essentially what you're doing, right?
Correct.
Okay.
Question, Henrik?
Sure. Hey, I spoke to you guys in April or May, I think it was, and I think you've come a long way since then. I think this is a really nice way that you've proposed your solution here. Yeah, questions. You've interest from quite a variety of different parties because of, I think, where you kind of came from in your development. Where are you going to focus?
Yeah. So where our software is really valuable are for these off-grid systems that have a combination of generation resources, like solar and a generator and a battery. Now, telecom towers is a great application for that because they're going to be 400,000 towers with that type of system, but there are other businesses in these off-grid areas that use similar systems that could have benefit to this as well. So we're looking at different commercial applications of these types of systems.
So I'd love to understand what the software runs on. Is it in firmware in somebody's hardware device? Are you guys shipping code to an integrator who puts things together? Or are you putting your own little Linux box inside a panel that then interfaces to somebody's control system? What do you ship? What does the customer see?
Yeah, so the software runs on the cloud. These telecom tower sites send their data back to a remote operating center, and we can get that data from those operating centers through their API. Our software runs on the cloud and then can send either notifications or automated control.
Well, that makes sense, but there's an integration problem, right? I mean, your algorithm has to eventually talk to something. Is that through standard APIs, or do you have to do it partner by partner, control system by control system?
So that would be, well, two things. One, it could be that customers just want notifications of how to operate their systems better. If they want automated control, then would have to tap into their existing communication protocols like Modbus.
Okay, so let's come right back down here. Eric, takeaway advice, feedback, go for it.
I think this is a fantastic idea, and one of the reasons is that it plugs and plays into the technology that's already in a lot of off-grid hybrid systems. It's not a pie in the sky. 4 years from now, we'll all be 100% energy storage and solar, which is actually a very common business plan. So first off, congrats on I think, getting to something that you can solve tomorrow. The real challenge is, I think there's some planning to do, but this sounds familiar to the past presenters. I think you need to build it. You need to find a spot in the greater Boston area and find a diesel hybrid system that you can monitor and start recording data.
Go ahead, Rob.
I also really like this. I happen to think that microgrids are, there's a great big white space there that needs to be filled, and microgrids are a big part of the solution, and too often people think about that just in hardware terms. So I really like this, and it's not a what would I do tomorrow kind of comment, but I would urge you to think bigger, and it actually dovetails with some of what Matthew was saying. First of all, you're giving up a lot of economic value. You haven't tested yet that people are going to be willing to pay $2,500 per software seat per year, and I bet you when you get out there, that's going to be really negotiated down. So you're going to be creating a lot more value than you're capturing. In the write-up, you guys haven't seen the write-up, but in that write-up, it was clear that your CTO has actually helped build some of these systems, and these systems are not rocket science. Why don't you sell microgrid systems themselves, right? Maybe that's an aspirational comment, but that way you're able to, first of all, design the system so that you are interacting with the appropriate hardware and you get rid of those interconnect issues. And secondly, you're in a position to capture a lot more of the value that you're creating. Turn this into a service business, not a software business.
Great feedback. Moving to Henrik.
Yeah, as much as I like your focus on the telecom side, I'd be really interested in understanding what we can do with this in oil and gas specific applications, of course. I mean, we're also doing some work on microgrids, and I think you do have the potential to do more than indeed just sell software. I think that there's a lot more there. So look into the alternatives that you have whilst retaining some focus to move things forward. And try and find out what other value you can create with your solution in perhaps higher value applications.
And feedback, Matt.
So your pitch was fantastic, and the solution is really credible. Hats off to you. If I were in your shoes tomorrow morning, how many co-founders are there?
3.
So tomorrow night, go out to get drinks. Have 2 drinks. Less than 2 drinks, you may not be honest with each other. More than 2, you may not be in control of your faculties. And ask each other what success looks like. I agree that you can go out and do something bigger. That's going to take a bunch more money and a lot more risk. I think if you demonstrate this and can actually show the model that you describe, you can sell this company for a few $1,000,000 a few years from now. You each take a third of it. That'll change your lives permanently and open options that you would never have otherwise. So there's a size of pie versus slice of pie trade-off. You should all be agreed on what success looks like. If you disagree, it's going to be rough for the 3 of you.
Thank you, guys.
Wonderful. Round of applause for Evan. Okay, so let us hear from Willem Rensink, our platinum sponsor tonight.
So thank you all for coming out here tonight and be part of this dialogue and watch these pitches. And so I'm representing the game changer part of Shell. And we've been sponsoring these events in collaboration with Chris and Graham, actually, for the past 2 years. And it's really for us to get exposure to the entrepreneurial community around, clean tech energy, but also, spilling over to oil and gas, because there's plenty of opportunities in oil and gas technologies as well. So we've always set this all open. So what Shell Game Changer does, it's much more of a collaborative model. So we do sponsor collaborative research projects where we bring technology to a proof of concept that then gets the credibility within the greater Shell organization and then can lead to sort of follow-up investments by either Shell Technology Ventures, or we can work with the Shell businesses directly, or a continuation of our collaborative research. So we're looking for early stage ideas, can be university researchers, non-profit organizations, startup companies, that are willing to demonstrate their technology to a proof of concept that's relevant in any of the Shell businesses. So we do a little bit of clean tech, also traditional oil and gas. We've got very simple criteria. It has to be highly novel, very valuable. There has to be a doable plan that, in a reasonable amount of time and funding, we can demonstrate a technology to that proof of concept. And it has to be relevant for Shell. So it has to fit our businesses. And also in the clean tech, we have certain focus. Which is more around, so energy storage is one focus area for us, natural gas integration, anything that has anything to do with upgrading of natural gas are a few of the areas in clean tech space, very, very active. Offshore wind, becoming an area we were more interested. So if you're interested or have an idea, come talk to me or Henrik in the break or afterwards. I'm going to be at Meat Hall after the meeting. So thank you.
Awesome. Thank you very much, Willem. So, let's hear from Ms. Levin.
Hi, thanks for coming out, everybody. I'm Sahir Sarmeli. I'm the co-chair of the Energy and Clean Tech practice at Mintz Levin. We're a law firm with headquarters in Boston, but really I like to think of us as a firm that supports innovation, in particular in the energy and clean tech sector, where we've been working for almost 10 years. We have a wide range of companies that we work with, everything from startups like XL Hybrids, Fast Cap Systems, Innovari, NanoSteel, NDB Nanotechnologies, Oasis Water. We like to work with companies as early as we can to help them grow. We like to find companies and help them win and get bigger. So we work with companies like Enernoc, Great Point Energy, Coltech, Flow Design, Wind Turbine, a lot of companies that we've have worked with since early days in the company. You kind of make that commitment to help a company grow. You invest your time. It is pushing a rock up a hill. You actually, Matthew, don't make a lot of money in the early days. What you do is you help build winning companies, and that builds success for both the company and for us. And so we like to be a part of that. We like to be a part of the community. Thanks for coming out, and I'll see you at Mead Hall.
Thank you, Zephyr. Dave Ulrich from WorkBar. Hello, I'm from WorkBar. We're on the back of your pamphlets there, where Chris is bringing up something too. For those of you who are unfamiliar with us, so WorkBar is a shared workspace, or co-working space as it's also known, where we have a variety of offerings from open table to a private office, and we work much more like your gym membership, assuming you have one, as opposed to a traditional real estate lease. So we go month to month. We have locations down across the street from Atlantic Ave, where we started ULS Boston. And we also have a new location in Cambridge in the heart of Central Square. I invite everybody to obviously check out our website, come to some of our events, and as opposed to me sitting here telling you about the great community we have with a great diversity of people we have that range from lawyers, writers, big companies, small companies, it's really inclusive, and we really find the diversity of our membership to be one of our big strengths. It's actually surprised me as we started it. There's a couple software geeks. But anyway, I want to invite everybody during Innovation Week in Boston. The date is October 9th. We just expanded the space in Boston. We doubled yet again. We are having a launch event, and what that's going to be is something of a trade show almost of all the companies and members that we have in WorkBar, and it's a good opportunity to see what happens there. As well as there's a couple other companies here, very interesting. Here, go down just a little bit, Chris. We have Achiever and both the Samurai Investments. A couple really interesting companies they're launching there too. So I invite everybody to put that down on their calendar and come visit us and see what we're about. And thanks, Chris and Graham.
Dave. And I don't think anyone's here from Microsoft Nerd Center or the BizSpark program, but just a thanks to obviously hosting us again tonight. And I think it's now time for a stretch, right?
Yeah. Our next presenter is Dr. Frank Gibbard of WattJoule.
Frank, you have 3 minutes. Go ahead.
Good evening. I'm Frank Gibbard, CEO of WattJoule and a co-founder. I'm going to start by explaining what WattJoule does. Basically, we store large amounts of electric energy using flow battery technology. Imagine for a minute that you had our problem of how to store 80,000 times the amount of energy in a laptop computer battery. How would you do it? Our solution, it's the best solution that I've come across in 30 years in the battery industry, and I'm going to tell you about it. We want to store that electrical energy as chemical energy in liquid solutions. When you pump those solutions past the electrodes in a redox flow cell, you can store the energy in holding tanks, and then you can retrieve it from the holding tanks later on to operate anything you like. What's the main advantage of storing electricity in flow batteries? It's cost reduction. The energy system is 3 times less expensive than the lithium-ion batteries that power laptop computers and some electric vehicles. So, now you know. Flow batteries are the best way to store really large amounts of energy at the lowest cost. But of all the flow batteries that one might choose, why are WattJoules the best? Quantitatively, 600% better energy density, 100% better, that's power density, 100% better energy density, 110% larger operating temperature range, 800% larger range between maximum and minimum operating power, and these all lead to a 65% reduction in system cost. Next slide. Next slide. Thanks. So we create value through our unique product platform, our IP, and our value chain, so that by 2016, we'll be generating revenue through product sales, generating a perfect storm when our product availability reaches the early market demand. WattJoule's value propositions apply to renewables, microgrids, and time of use, to mention a few. Our customers are large electric system integrators, OEMs such as ABB, Siemens, and others. Our economic advantages include a product platform with a large market application space and a 10-to-1 manufacturing capex advantage for scale-up. That means for the first commercial plant investment of $100 million for a lithium-ion battery, we would only need to spend $10 million. Why? Because making liquids is cheap compared with making sealed batteries. Our IP position is based on millions of dollars of research.
10 seconds.
Founded by the Department of Energy, Office of Naval Research, and the National Science Foundation. We're looking for a consortium to go with our lead investor, which has already been chosen. Thank you very much.
And time. Okay, moving right into questions. So go for it, Eric. What questions do you have?
So power-dense batteries and energy-dense batteries have different applications, right? And somewhere along the continuum, as you move from power-dense to energy-dense, you change the end use of the battery. So when you guys are obviously making a dramatic improvement over flow batteries and power density, have you thought about what is your first target market?
Yes, microgrids, for example. The ones that I gave you, microgrids, time of use is a little further out. Renewables, we are very strongly interested in renewables because our lead strategic investor is in that business, wind power and solar.
Question, Rob?
How many flow battery startups and manufacturers are there today?
There are probably, if you count China, there are probably 10, maybe more.
I think that estimate's probably low. And how many of them have been successes?
Commercial successes to date, 0.
So is it a product performance difference that you think is going to be what allows you to be a success where they have failed?
The problem is one of cost. It's primarily a one of cost. The performance is there, but if you look at for example, you take Prudent Energy in China and look at their systems, you get 10 kilowatts out of a unit that's 1 cubic meter. We could do it in a thing the size a little over a bread box. So we have a huge advantage over other things that have been done. So we have technology for energy density, which we're getting from PNNL, Pacific National Laboratory, and we're getting power density from some other folks from the academic community.
But sorry, and just follow up. But give me a sense of an application that you're enabling with stationary flow batteries, given this energy, because they've traditionally not been used in areas where square footage matters, right? That's not where, and it's sort of as what Eric has been saying. Tell me a sense of a specific application that's perfect for your flow batteries.
Solar energy. When the sun doesn't shine.
Why is space a constraint for storing solar energy?
Well, it's not. It's not. I use space as an indication of the amount of material that's in the system. It's more properly volume, and the cost of the system is proportional to the volume.
Next question from Henrik.
So I think I can say that we as Shell are kind of struggling with the question of what to do with energy storage. And one of the big questions we have around this is who is going to make the money in the value chain here?
I would like to think that our customers who are going to be the OEMs, the system integrators, will make money. And I believe that we will be able to make money by selling to them with a minimum capital expenditure and not worrying about meeting all the stuff that's already well developed, such as the electronics and the controls. We will provide modules that they will integrate into systems and sell.
Okay, so actually I'm going to ask Matt to jump right into feedback because we went a little over in time on that. So if you could just turn your maybe question into feedback and take away advice.
The experience that I've had of flow batteries has not been that the issue has been energy or power density, it's reliability. That the fans break and the seals leak and the pumps fail, and it seems to be more mean time before failure issue. I feel like there's probably a lot to be learned by going out to existing sites and seeing what the experiences have been and what the real failure modes are.
I'm right back, Henrik. Feedback?
Thank you.
Yeah, I didn't catch, do you already have something working? Like a demonstration?
I didn't say.
I know this is a question.
It's been demonstrated at the laboratory scale, this is a question, of course. It's been demonstrated at the laboratory scale, and it works very well. And the base technology of this type of system, which is an all-vanadium flow battery, has been tested up to the about 20 or 30 units from 250 kilowatts to megawatts.
Okay. So apart from understanding the technical risks and demonstrating that you can do this and addressing all the issues that Matt mentioned with reliability, I would really think about how you're going to structure your solution and your company in this value chain in such a way you're going to be working with partners, et cetera, that you're going to be able to actually have a viable business. So I'm talking about addressing the commercial risks of being in this space.
Absolutely. Thank you.
Feedback, Rob?
These guys anticipated, obviously, where I was headed with my questions before, too. And it is going to be about who sells this for you, right? I mean, it's a long road to get some of these OEMs. I mean, Siemens won't move fast for anything, for a new technology that's being sold to them from the outside. So first, they get their money, then they'll move faster. But joking aside, the only one of these flow batteries that I've recently seen get good revenue traction, they're doing exactly what Henrik said. They are actually not just selling just the batteries. They've ended up selling microgrids, including the controls and including working with system integrators who actually do the implementation on site. But just think about it that holistically, because otherwise it's what we've been saying, pushing the rope uphill.
I think one of the problems you're going to run into, and Matt actually mentioned this, is that there are lots of examples of these sorts of systems that break, which actually answers part of Rob's comment. Why it's difficult to invest in this space is because the durability of the systems just isn't there yet. So I'd say talk to some developers, find some folks from AES or Extreme Power or a few other folks that are building systems, and find out what went wrong over the last 3-4 years when they've had some of these deployments. And they haven't all been flow batteries, a lot of them have been other technologies, electrochemical technologies, but find a couple of examples and see if you can back into your milestone map from that experience.
What went wrong besides the fires?
Besides the ones...
I have to say our batteries do not explode, they do not burn.
That's good. Okay. Thank you, Frank. So next up is Thomas Tao of StannTron, and on deck we have Lawrence Walmsley of Culture Fuels. So Lawrence, make your way over towards that side of the room. So Thomas, 3 minutes. You got 3 minutes. Go ahead.
Thank you. My name is Thomas Tao from StannTron. With me tonight, our board member, Mr. Ray Readers in backside. StannTron is a developer of the chemical decarbonation technology by making biochemicals, specifically acetone and flavors, from most common biomass carbohydrates. Our technology is unique, different from any other player in this field. It is a fundamental advancement in making biochemicals. It is a chemical process by removing carbon dioxide from biomass with a chemical strongly bonds with the carbon dioxide, therefore preventing dehydration. When we're talking about biochemicals, many people immediately link to the biological process. Our technology is not fermentation, does not use enzymes, does not use bugs, does not use violence. So, and also it does not use a catalyst either. It is somewhat dynamically controlled chemical process. Next slide, please. Our partners have targeted growth to 20% from current 9%. Most chemical companies want to grow their biochemicals portfolios. We have target 14 billion acetone, 1 billion fine chemicals. We have multiple revenue models. Our primary revenue is licensed to acetone manufacturers. The secondary revenue is making fine chemicals. We plan to achieve revenue in 2 ways, in 2 years, and financial break-even in 5 years. And we are currently looking for $500,000 seed round. We believe our products are able to compete with petrochemicals and are substantially cheaper than biochemicals made from biological process. We have teamed up with Boulder Ionics, Protonics, with State of Maine, and also with a global chemical companies. Our management team and the board are seasoned executives and entrepreneurs.
10 seconds.
Oh.
Done. Okay, so let's move right into the questions. Go for it, Eric. What questions do you have for Thomas? StannTron.
So this is really just a clarification question about where you guys are at in terms of your piloting or your technology in the lab.
Technology is still at a lab stage, and was funded by National Science Foundation.
How much have you been able to produce? Maybe that's a better way to quantify it.
Less than 1 kilogram.
Question, Rob.
So as an investor, if I were looking at an opportunity like this, one of the first people I would call to ask his opinion would be Matthew Nordan. And since I took up his time on the last one, I cede the balance of my time to Matthew Nordan.
Question, Henrik.
One of the things I would be concerned about is scaling. So what do you see as the main technical risk in scaling up your process?
That's excellent questions. I'm a trained chemist. We all know that when you make this small, and it's very different from tons or 100 tons or 1,000 tons. And this is area, is our approaches at this moment is the leverage government funding. And we are seeking a number of contract or grants from the number of U.S. Federal governments. And the technical issues, because the technology is complete new or unique, and there's no other play in this field. So this double sword, and for us, one is they give us exclusive right to that. The second is we have to solve all the unknown technology issues. And in terms of scale, and we at this moment we do not foresee any roadblock.
So this is a licensing model, right?
The licensing model is allow us to generate revenue early on, and we are targeting number of chemical companies.
No, I got it. That makes sense. But there's some processes where everybody agrees on what the license rate should be. Mm-hmm. Like in hydrocarbon cracking, everybody knows what they pay UOP for their catalysts.
Yeah.
What do you think your licensing deal is? Is it based on value added? Is it based on, what's it based on? What are the numbers?
The license fees, we are looking at 3 to 5%.
Percent of what?
Of the revenues.
Of total revenue?
Yeah.
What's the gross margin for acetone?
Gross margin, this is a good question. The acetone is mature business, commodities, and roughly is $10 billion annual. But there's a big drive from our partners, for example, and they are, at this moment, they are leaders in they are leading acetone user, and also they have 9% of chemical portfolio in renewable. They want to double to more than 20%.
No, I get it, but what's the gross margin in that business? Is it 10%, 20%, 5%?
Commodity is less than that, but for bio, this because made from a renewable source, we expect more than 30% to 50% per year.
Feedback. Go for it, Eric. Takeaway advice.
First comment is, if this has been a goal for lots and lots of organizations to sell into some of these same customers. I would get really crystal clear on some of the programs that Sunoco and Ashland and Eastman have to help commercialize these technologies and get into a test bed program that should exist. That's going to be your best bet to try to go head to head with a lot of other players producing the same chemical.
Thank you.
The companies that look like yours that I've seen succeed have incredible business development expertise on the team, in addition to having world-class technology. Mm-hmm. I guess what I would urge is take a really close look in the mirror tomorrow, and the answer may be, hey, we have that. I don't know you. I'm not prejudging. but really challenge yourself to put an incredibly high bar on bringing in business development talent out of this industry that comes in with the Rolodex and can not only sell product when you have it, but can actually pre-sell and get you funding from your eventual customers.
Thank you. Your advice will taken.
And building on that, so there's a number of companies that you've listed in your targeted customer area, and the company that I work for is listed there as well, that have experience in scaling up these types of processes. So think about who you could work with to share some thoughts about that and work on the technical risk side and the business development side as well. It's very challenging. There's a lot happening also in the natural gas to chemicals space. There's nothing here in terms of a competitive comparison to that, but work out how this compares to that space, because that's also a lower carbon chemical. It's not biomass, but it is a little bit of a gray area there.
Okay, thank you. We'll work on that. Yeah.
So as presented, this technology is actually really interesting. It's one of the more, I think, interesting and credible things we've seen tonight. I would really think hard about what the licensing structure can be. You know, if the gross margin is 5 or 10% in this category as a whole, you're not going to get, you know, the majority of the economics. It's just not going to happen. Mm-hmm. And I would be very cautious about building a business plan on the basis that there will be an outstanding price premium for a bio-based derivative of another product. I think we've seen a lot of businesses fall on their face when there was a very small initial market that was willing to pay a premium for a bio-based alternative that was not representative of the market as a whole.
That's a good point. Yeah. Thank you.
Round of applause for Thomas. Thank you, Thomas. So next up we have Lawrence Walmsley of Culture Fuels. And finally, the last presenter tonight is Susan MacKay, who should make her way over to that side of the room. So Lawrence, go ahead. You got 3 minutes.
Thank you. Good evening. I'm Lawrence Walmsley, CEO and co-founder of Culture Fuels. We manufacture a system to grow algae for conversion into fuels. This system is made of thin sheets of polyethylene plastic film, which then floats in a deeper body of water. It looks a lot like a thick plastic bag or an air mattress that you use at the pool, and the algae then grows inside. We have 2 patent applications on this. One of them is in national phase in the US and EU, and the other one is we just submitted, so it's still provisional. Both of these are on the design and application of the technology. Over the last 3 years, Culture Fuels has developed the technology further. Now we have a product that's ready for commercialization, which is operating at our demonstration facility in Southwest Florida. When you calculate the full cost of production for fuels in the biofuel space, what's important is the ratio between the output per acre relative to the cost to run that acre. The 2 ways that algae are grown today, in open ponds, which are big pools of water, or highly engineered photobioreactors made of glass or plastic, both have a challenge with that ratio. The Culture Fuel system takes the best of both of these elements and produces algae for fuel at $2 per gallon. The results of our 14 months of outdoor testing have shown that the Culture Fuels cultivation platform has the operating performance of a photobioreactor at the cost of an open pond. Next slide, please. Culture Fuels' business model is to sell the equipment and operate it for project owners. Local groups then finance the construction of it, which is a capital light and flexible business model relative to what other algae companies are doing today. We have 2 products, a license on the technology as well as the manufactured system itself. And in general, we've noticed that US-based groups prefer the manufactured system, non-US-based groups prefer the license. As I mentioned earlier, we have a demonstration facility. This one is located at a landfill where we get free CO2 from a methane to power engine. And the picture here on the bottom right is of our 500 square foot product operating at that demonstration facility. A lot of algae companies are focused on improving the biology of the organism. This is very capital intensive, very high risk, and has not led to significant breakthroughs. In the engineering space, Solix Biofuels is a direct competitor with a very similar system. However, theirs is also floating, but they build theirs vertically into the water, which is a lot more capital intensive than building it horizontally across the water surface. In the fuel space, our primary customers are oil companies who are looking to meet their renewable fuel mandates and to satisfy the needs of airlines and the military who are looking for low-cost domestically produced fuels that do not have the food versus fuel challenge. Thank you.
Okay, let's move right into the question section. So, Eric, what questions do you have for Lawrence at Culture Fuels?
So a lot of biofuels companies, especially algae, have run the challenge of being able to get enough energy out of the kilogram of algae, right? And there's, as you pointed out, a lot of research into the biology of how do you increase that. When you compare your product against what, there's a gamut of hundreds of technologies or companies out there doing this. How would you estimate you stack up in terms of energy density per unit mass?
So I mentioned there's this ratio, output per acre divided by cost to run the acre. So most people are focused on the output side. If you have a high enough numerator, you can sustain a very high cost base. We believe that's never really going to move the needle. You have natural strains, so whatever Mother Nature has, that growth rate, which 2,000 gallons per acre roughly. But how you have to make the capex on the denominator low enough so this can work.
Next question, Rob.
Good to see you again.
It's third time now.
Exactly. Third time's a charm. So just to clarify, you don't provide the algae, right?
That's correct. Yep.
And you don't process the algae.
We have partners that do. So we would come together to a project owner with all of that. And an suggested strain to use.
So at this point, Eric's right that there's a bunch of people who are trying it, but at this point, how many up and running algae production to biofuel plants are there that you're looking to supply?
So there's Matt's investment in Sapphire, right, which is an up and running system. But we really think that our business model is to sell to non-algae companies, right? So Shells of the world that have upstream oil wells, that have an upstream algae farm someday, or other investors that want to come in. I think Sapphire is more of an integrated unit that really wouldn't purchase an outside system.
Question, Hunter?
Yeah, so as a company, we have looked at this and have some activities in this space, which I'm sure you're aware of. So a challenge with this technology for us is scale. We like to do very big things. So on that note, is there any kind of like upside in where this could go that would make me really excited and say, oh wow, this at some point in time is going to be so big that we can actually, as Shell, we can do this. These are going to be big projects. They're going to be very efficient. They're going to produce a lot of fuel per kilogram of algae.
Yeah. So I think two things. One is the system is inherently modular because each of these is right now a 50 square meter unit. We'll probably grow them up to about 200 square meters each. And that means you can easily close one down if you have contamination issues without taking down the whole farm, which is a big problem with ponds. But the other side, I wasn't sure it's clear, is each of our bags is only 2 inches deep, 5 centimeters deep, instead of the foot or 30 centimeters usually you have of water. So you only have to process 1/6 as much water in the harvesting downstream. So it makes the whole system lower capital.
Matt, can you fit a
What
feedback?
is your rate of biomass growth that you've demonstrated?
We get between 15 and 20 grams per square meter per day using natural strains.
Can you move that right into feedback, Matt?
Yeah, I think the problem that's been pointed out by folks here, right, is that there's a chicken and egg. In order to get large players interested in deploying systems that will be big enough to be meaningful, versus kind of drop in the bucket revenue, you got to show that it can work and that it can work when you do it at a reasonable scale. And I realize the business model that you're suggesting is not to be an integrated provider, but sort of a technology supplier and licensor. I think you're probably realistically going to end up having to build the first one on equity in order to demonstrate that it works. I think it's unlikely that somebody is going to be willing to do that on their dime, particularly if they are not already deeply involved in this field. So I'd think about that. Would think about whether this is an independent exercise or it's one that is married early to a large company.
Thank you.
Yeah, so for a company like Shell, you'd have to be able to prove indeed that you can scale up and make this into an interesting large business model. In the absence of that, think about perhaps what niche you can go after.
How would I do that? The first question.
The first question?
Yeah.
This is just
Proof to
feedback.
Shell I can scale.
This is feedback only.
Let's talk after the session. Yeah. So the other thing is that I was saying is perhaps look for a niche where you have customers that would be willing to pay for this particular type of fuel or product. But to Matt's point, there's on a previous opportunity, it's not very often that you have a small market where players or people are prepared to pay a premium that persists for a very long period of time. So it's a challenge, but on the upscaling side, yeah, let's talk about that, but that's definitely something you'd have to demonstrate.
Yeah, this chicken and egg problem is a common one in a lot of clean tech sectors, and one successful strategy that we've seen deployed is really what Henrik was getting at there. And I would break it away from niche producers for fuels or anything like that. There's got to be some commercial use out there for small scale batches of algae. And so even if it means sacrificing more margin or something like that, you need to get out there and find somebody who's willing to do this. What I really liked hearing was that, and I guess it's been like 4 years since saw you last, it sounds like you have taken that more sort of integrated approach. Even if it's not you building the plants yourselves, you have identified the other pieces of the puzzle to put a plant in place, because you're talking about eventually selling to customers that, like you said, are not algae producers. So you're going to have to solve all of their problems, not some of their problems, all of their problems. So I like that you've started to tackle that.
Advice, Eric?
I'd say my comment is probably pretty similar to the last participant, but there are organizations that I know the two representatives of a large oil company in this room that starts with Shell would be one, but there are others that have test bed programs that allow you to get in and do piloting on a trial R&D basis. And I think your next challenge is get a lot of those conversations so you can find the one or two that are going to be willing to do this at scale to answer Matt's concern. Thank you.
Round of applause for Lawrence. Okay, our last presenter tonight is Susan MacKay of Cerahelix. Susan, you have 3 minutes. Go ahead.
Thank you. Good evening. My name is Susan MacKay, and I'm the CEO of Cerahelix. At Cerahelix, we've developed the first ceramic filter that filters at high purity and low pressure. And our innovation is that we use DNA to template incredibly small, less than a nanometer sized holes in the ceramic material. We then apply this material as a coating to the surface of ceramic filter supports. This then produces a product that filters at 10 times more purity than current templated ceramic filters on the market today. Because we're using DNA, we're also able to form pores that are linear and continuous, and this enables our product to operate at higher fluxes and lower pressures. So we call this product the Helix nanofiltration membrane. And we also recognize that in initially we will be targeting verticals that use the advantage of it being a ceramic filter, so it is very durable, operates in very challenging process conditions. However, in some of the cases, we will be competing against polymer filters, and so in that case, we are more durable, and we also provide the faster flux at similar types of cutoff. Next slide. We currently have 3 issued patents on this technology. We are going to be generating revenue through direct sales to end users of filtration systems incorporating our filter. To this end, we'll be partnering with engineering and fabrication firms, including the one that produced our pilot system. We have done a first commercial pilot. We have several in the pipeline for our first vertical, which is the emerging biofuel industry. And that is because in this industry, we'll be displacing a very energy-intensive process, that of thermal evaporation. In that case, we offer a very attractive advantage in total cost of ownership, primarily dependent on the fact that we operate at 95% less energy consumption than an evaporator at scale. So to date, we have financed the R&D and prototype development through SBIR funds, 2 phase 2 SBIRs from the National Science Foundation and currently with the Department of Energy as well. And we are actually currently raising a seed round of capital of $200,000, of which we have 130 soft circled. And we'll be applying these funds to generate more business development expertise on our team and to get us to market by 2015. So thank you for your attention. I'd be happy to answer your questions.
Let's move right into the question answer round. Go ahead, Eric.
So at the point at which the feedstock water enters the membrane, how filtered does it already need to be? So in a quantified metric like total dissolved solids or chemical content?
That will really depend on the process stream. Our first commercial study, we really were processing in a biorefinery, for instance, things that were coming right out of the first process step. So we really just needed to filter out the actual particles, particulate matter. So we were processing a fairly highly fouled stream, and we're still able to operate, although it did impede our flux.
So does that actually mean that the membranes are resilient to chemical contamination?
Yeah, in that case, it was a very, the sugar and the lignin and everything else. So it required back pulsing and cleaning with hot water to continue to operate.
So who in the team has biz dev expertise in selling to large water filtration equipment OEMs?
Well, that's the person we're trying to bring on board with this seed round. So to date, I'm the one that has any manufacturing experience at all. I used to work for 3M, so that's my background.
Question, Henrik?
You mentioned a number of growing industries like biofuel, bioproducts, food, beverage, oil, and gas in the write-up, growing markets that could growing if they could start using this technology. Could you give me an example of a customer who, when he sees this, would really be really excited and saying, okay, this is going to create 50% cost reduction here and there? And how many of those are there?
Yeah, the biofuel producers have been the ones that we've talked to the most, we've had the most experience with, and there they are excited because we deal with a process step where they can't actually apply filtration right now because the polymer filters don't operate in the conditions. So they see so any place we can displace an evaporator. The other customers we've talked to are in like food and beverage have been similar types of process steps, trying to dewater sugars. Trying to extract to high efficiency, small dissolved molecules in the water. We've done some. We've been approached by some oil and gas companies as well, in and around produced water, and so those are the ones that we've done the most research and the most discussions with.
So here's my super nerd question. How do you template sub-nanometer holes with DNA? I thought DNA was like 2.5 nanometers wide.
Oh, that's the hydrodynamic radius, but actually we find that the material seems to conform to the shape and the structure of the DNA as well. There's a lot of interaction between the DNA and the ceramic when we template.
And you indicate TCO over 3 years, 54% less. What's the first cost? How does that compare?
This is for a very specific application within the biorefining space. So this is at a certain scale. We're the same or less in terms of capital expenditures for a thermal evaporator. And then, of course, the energy payback is greater over that time period.
Perfect. So let's move right back into feedback. So this is the last round of feedback for the last pitch of the night. So sending takeaway messages. What do you have, Eric?
So it sounds like you guys are well on your way to thinking through of the technology. I think one of the challenges that's in front of you is obviously fundraising. I would start by going after not water filtration companies, not sort of your target customer, but pure play financial players, some of which are likely in this room, and just get those conversations with angels and early stage investors started.
How did I know that Matthew was going to be the one who asked the super nerd question? I love it, man. I love it. Yeah, it's the same recurring theme from me all night because this is what we care a lot about, which is go to market, right? And the nice thing for you is that there are pretty well established go to market models for this type of product. Now you're going after different kinds of applications, but that's not a bad thing. That's a good thing. So I'm glad to hear that you're looking to bring on that biz dev expertise. I would actually encourage thinking about that before the funding, because I think that might be a very important part of how you sell yourselves to those financially oriented investors as part of the Series A.
And as you do that, if you're interested in getting funding from a strategic corporate venture capital group, you'd have to think very well about, of course, the specific application within oil and gas and what that is, what your technology is going to do better as compared to the competition. There is a lot out there in this particular space, so having something ready and having a pretty good deep understanding of what needs to be done in our industry and differentiating yourself from everything else out there, I think is going to be really important. And also understanding, or maybe you already have that, of course, but how the value chain here works. There are established models out there, commercial models, but who makes the money in the value chain, and how are you going to create and capture a fair amount of value?
Last piece of feedback from the night.
So I don't really have a ton to add to this. I think those are the key points. The only thing I would point out is that the number of folks proffering a better membrane is large, and there tends to be some gotcha. You know, that, oh, there's concentration polarization, or, oh, you know, the robustness is only good in these certain influence because, you know, we break down when we have this particular crud in the water or something like that. So I think it really is you're figuring out specific applications to go after, you know, where the value proposition is particularly strong. And that's just going to require somebody beating the street, right? You know, wearing out the shoe leather, hitting customers. And I think you and your co-founders probably have your hands full.
Thank you.
Thank you, Susan. All right. That was the last pitch of the night. So now is your chance to vote on your favorite startups and on your favorite panelists. By now, you should all have received an email from me, probably about 45 minutes ago, inviting you to vote. At least anybody that registered online in advance would have gotten that. If you didn't get an email from me, you can still vote by opening up your browser and typing in that URL, which theoretically has some sense to it. ULS, ultralitestartups.bz, Belize or business perhaps. Future Energy Boston 2013. If you haven't gotten an email from me, then you can just type that in and you can vote. In the meantime, we'll make a couple of brief announcements. And that is that there are 2 more in-person Future Energy events this year. One of which is in 2 weeks from today. It's in Silicon Valley. It's in San Francisco on October 9th. That's a Wednesday. So if you all happen to be out there, feel free to stop by. We encourage that. If you want to make a trip just for Future Energy, we also encourage that. Not sure if that's happened before. New York City is a little bit closer to home, November 20th, which is a Wednesday. That event is going to be at NYU, sponsored by the Stern Energy Club, in addition to a wide variety of local sponsors in the New York City and New York State area. We'll also have a virtual Future Energy event before the end of the year. That is scheduled to be determined, but we have a platform that we've been working on where you'll see this exact same format: startups, investors, pitches, feedback, advice, question and answer, community, but it happens entirely online, and that is designed specifically for companies that are not based in New York, Boston, or Silicon Valley. So we did a pilot virtual Future Energy event earlier this year, where we had companies from 5 countries, the US, Canada, Uruguay, South Africa, and Belgium. And we had investors from the US as well as UK, Ireland, Germany, and Israel. And it was a fantastic pilot of that online platform. Anybody still voting? No. 1 person still voting. 2 people still voting. Okay. So we will bring up, we log in here. Go to, yeah. Gotcha. Actually, we have a special award today, which is the Fraunhofer Tech Bridge Consulting Award, and that is going to be given to Evan Kantor of Raja Systems, or Raha Systems, I believe. So congratulations, Evan. So, we'll all bear with me as I log in to my account. We will see what the results are. No pressure. See if I can remember which password I use here. That works better. Okay. Here is the answer. Looks like Susan MacKay of Cerahelix is in first place. Evan, come on up, Susan. Come on back up. Evan Kantor of Raha Systems wins his second set of prizes tonight, second place. And then third place, with 35 votes, by one vote, is Lawrence Walmsley of Culture Fuels. So congratulations, Lawrence. Come on up. And now for the really, really big prize. Who wins our eternal gratitude? And it is Matt Nordan of Venrock. 86% of the audience voted for you. Congratulations. All right. So thank you, Matt. Thank you, Henrik. Thanks, Rob. And thanks, Eric. We will see you all very shortly, just down the block at Mead Hall. We do need to get out of this room pretty quickly, so I would encourage you to head over there as soon as possible. Thank you so much.